Hello everyone and welcome to the webinar Project Pipeline Handbook 2024, Finding the World's Best Mining Projects. My name's Sam Williams, I'm editor of Mining Journal Intelligence. We're a research arm of Aspermont, which is the publisher of titles including Mining Journal and miningnews.net. Mining Journal Intelligence produces a suite of mining research reports, including the Project Pipeline Handbook, which is the focus of this webinar, and the World Risk Report, among others. So the title of the webinar, Finding the World's Best Mining Projects, is in essence what this Project Pipeline Handbook is all about. And today I'll briefly describe how we go about this and unveil our top pick of the world's best mining projects. So on the webinar today, I'm delighted to be joined by Rick Rule. I think for most viewers, Rick needs no introduction. He is founder and CEO of Rule Investment Media, and a leading mining and natural resources investor and investment strategist with a career spanning 5 decades. So today I'll be asking Rick for his insights on the theme of finding the world's best mining projects. And soon, in a moment, I'll just mention some of the key events we have coming up shortly in the calendar. So Rick, thanks a lot for joining us today.
It's a pleasure to be with you. I've been a beneficiary of Aspermont and the Mining Journal's work for many years. So thank you for having me.
Great, thank you, Rick. If we can move on to the next slide, please. Thank you. So this is basically the outline for the webinar. I'll first be introducing you to the Project Pipeline Handbook and present some of the key findings for 2024, and then I'll switch over to a discussion with Rick. Due to time constraints, we won't have time for live Q&A with the audience today, but I will provide my email address at the end if anybody has any comments or questions for either of us. So if we can go on to the next slide, please. Thank you. So just before I get started in my introduction to our report, I wanted to mention 2 key events on the theme of mining and resource investment, which are coming up very soon in the calendar in early July, in which Aspermont and Rick's company, Rule Investment Media, will be partnering. First, we have Mining Journal Select on 1st and 2nd of July. And this is really the sister event of the Project Pipeline Handbook, where companies with high scoring projects, according to our evaluation, are invited to present before an audience of investors. Rick is also planning to present and moderate a panel at the event. So just a few days later, we have from the 7th to the 11th of July, the hotly anticipated Rule Symposium in Boca Raton in Florida. And this is one of the key events on resource and commodities investing, and it claims an unparalleled reputation for delivering the most profitable insights in the sector. So it looks like you're going to have a very busy start to July, Rick, and I hope some viewers will be able to attend one or both of the events. But perhaps, Rick, you could just tell us a little bit about what you're most looking forward to at these events.
In both cases, I enjoy the process both of teaching and learning. I like the fact that these are curated events. In other words, the exhibitors, as an example, have to qualify to be exhibitors. At most events, the qualification for an exhibitor is a check that cashes. In these events, the qualification to be an exhibitor is much more strenuous. Attendees have told me for 30 years that they consider exhibitors to be content too. And the consequence of that is that while at many conferences the exhibitors are regarded as advertisers, in both of these conferences, the exhibitors are regarded as content, which I think is what sets these conferences apart from most.
That's brilliant. Thanks for that. And so now I'd like to move on to my first section of the webinar, which is the introduction to our Project Pipeline Handbook. Thanks for changing the slides. So the report was launched in 2019, and it's basically Mining Journal Intelligence's attempt to identify quality among the large number of mining projects out there globally in an objective way. So mining companies and investors looking to decide which projects to back or to acquire are faced with an initial challenge of finding quality in a vast sea of projects numbering in their thousands and falling under the ownership of more than 2,000 mining and exploration companies listed globally. So the aim of the Project Pipeline is to provide investors and mining companies with a whistle-down list of the best projects globally from this large pool. This diagram is basically a description of how we do this. So first, we focus on what I term the study stage projects. That is projects where economic studies have been completed, ranging from the PEA or scoping level to full feasibility studies. For now, we haven't looked at ranking earlier stage projects. We may look at incorporating that in the future, and projects are removed from our rankings once they enter production. So our process, in a nutshell, is to monitor economic studies. When a new one comes out, we trawl through it and we retrieve 25 key data points for each project. Using these data points, we assess projects across the 6 categories you can see on the screen, using 13 key metrics. Now, just as an example, you can see economics here on the top left. That's the biggest category, weighted at 40% of the total score. The metrics we use to assess that are NPV and internal rate of return, both of which we record on a post-tax basis, and the ratio of NPV to initial capex. So I don't want to go into too much detail. I'd like to get Rick in on the call as soon as possible. But as you can see, we have these 6 categories, and the rating of these 6 categories basically gives us an overall score out of 100, with a higher score meaning a more attractive project. So yeah, if anybody has any questions or comments on this after the webinar, I'll be happy to hear from you. As mentioned, I'll provide my email address at the end of the webinar. So our database of, can we go on to the next slide, please? Thank you. So our database of study stage projects evaluated using this methodology currently stands at about 460 assets, and these have a combined initial capex of more than $200 billion. So this year we had data from more than 200 new or updated studies which were added to the database. And as mentioned, this excludes projects which have been removed once they've entered production. So the Project Pipeline Handbook 2024 features profiles of 50 top scoring projects and an analysis of the database that underpins these projects and the rankings. So the report was published in May and is available for sale from the website on this slide, which is mining-journal.com/pph 2024. So it's available for free for Mining Journal and miningnews.net premium subscribers, and I'll provide details for subscriptions at the end. Now, I'd just like to turn quickly to the 2024 findings. So if you could go on to the next slide, please. And I'd like to, first of all, just unveil our top scoring projects. These 6 that you can see on the screen now are really the creme de la creme of our database. So these all have exceptionally high scores, as you can see, some of them in excess of 90 out of 100. It's interesting to note as well that the top 2 this year are both uranium assets, with some gold assets also scoring very highly. I will re-show this table again in the final slide, but now I just want to turn to the geographical spread of our top 50 projects. So if we could have the next slide, please. Thank you. As you can see from this slide, Canada dominates the table. We've got 17 of the top 50 projects in Canada, followed by 10 in the US, 5 in Australia. And Canada is also the location of 5 of the 6 very highest scoring projects. So if we can move on to the next slide, please. Just one last point before we bring in Rick. This is an analysis of our project database over the years has really kind of revealed shifts in focus in the mining industry over time. We look at both the number of economic studies that come out and the nature of those studies. And historically, over the history, the 5 or 7 year history of our database, the focus has mainly been on gold projects, and that's been both in the number of economic studies and also the combined initial capex of the projects described in those studies. But just recently, focusing in on economic studies we've had out in 2023 and the first few months of 2024. And what you can see on the screen here is that the shift in focus has moved towards copper and lithium, which are obviously 2 of the commodities, which are seen as having a key role in the transition to the low carbon economy. So if we could just move to my final slide. I've provided some details here where you can find links to the report and to the events I've mentioned, and also for subscription inquiries. My email address, if anybody wants to reach out, is sam.williams@aspermont.com. That's sam.williams@aspermont.com. So with that, I'd like to bring in Rick. Thanks a lot for sitting through my slides so patiently, Rick. I've obviously outlined one of the challenges of finding the best projects in such a large number of projects out there, and our attempt to evaluate projects in a fair and an equal way. But Rick, what are your thoughts on this challenge and on our approach, and how do you go about finding the world's best mining projects?
Answering the last question first, I try to avail myself of as many databases as I can, including yours. It is up to the information gatherer, I suspect, the investor, to access as many sources of information as he or she can. And then it's up to that same individual investor to rank the database, which is to say, look at the method by which the data has been gathered and the way that the data has been presented, and also sort for his or her own biases, preferences, time value, stuff like that. What's useful, I think, about your database is precisely that you're not an investment bank. In other words, you aren't necessarily paid by the company. Your allegiance is to the subscriber and the investor. From my point of view, having run an investment bank in my past, I like the fact that you owe your allegiance to the investor rather than to the issuer, which I would overweight. And I think for any investor, having the ability to access a database that's compiled by an organization that's a global organization, which is to say in Australia, in North America, in Europe, simultaneously probably takes out most of the regional bias that would occur from other sources of data. An investment bank, as an example, that focused on Canada probably would understate the potential for companies in Africa or Australia because they'd be unlikely to generate a fee from them. So the fact that your database is likely less ethnocentric than would otherwise be the case is also very useful to me.
Okay, that's very useful feedback, and thanks a lot for that, Rick. So you had a quick glimpse at our top scoring projects. They're mostly in Canada and uranium and gold focused. I just wondered really if there were any kind of standout assets for you in that list, or any surprises, just any kind of feedback on that?
Not particular surprises. I am interested that the gold work, particularly in Africa, didn't stand out higher. But I guess that has to do with the certainty of after-tax returns in Canada. I'm not so sure. Clearly, the uranium assets in Canada, in the Athabasca Basin, are incomparable. I would caution viewers that those same projects in 2022 wouldn't have ranked so highly when the uranium price was at $20 a pound. And you probably do need to screen, as an investor yourself, for what you think will be prevailing price, which is to say, if you think, as an example, that the lithium price, having fallen by 80%, has room to move, you have to reintroduce your own assumptions to the databases provided to you by Aspermont, which have to constrain themselves to net present values using current pricing. So you have to adjust. The wonderful uranium projects that you see wouldn't have appeared on the list in 2022. An investor who looked at the uranium price at $20 a pound US against a global cost of production, including cost of capital and taxes, social rent, at $60 a pound, might have been able to anticipate higher uranium prices, and as a consequence may have looked at the total database and moved some projects up and others down as a consequence of their own interpretation of price trends in the industry. But that would be my only criticism.
Yeah. Okay. Yeah. Thanks for that. And I think it's safe to assume that those two projects did not have scores as high as that in 2022 for the reasons you mentioned. So just to kind of follow up on uranium, I know you've kind of forecast higher uranium prices in the past, and we've now had an increase in uranium prices. I just really wondered what your view is on uranium looking forward. Rick, you're on mute.
I'm sorry, Sam. I don't believe that the price needs to go up, but I believe it can go up. Work that we've done, which is supported by the International Energy Agency and others, including Cameco, suggest that current spot prices are more than ample at today's interest rates to bring new projects into production. I think with regards to uranium, it's easy to say that the easy money has been made. At $20 a pound, the price had to go up. At $90 or $100 a pound, the price doesn't have to go up. What has changed, in my view, Sam, is that the uranium market, unlike any other commodity market on the planet that I know of, is moving from spot pricing, where there's no certainty in terms of the price that the producer receives, to contractual or term marketing, where producers can enter into contracts with investment-grade counterparties. Tokyo Electric Power, China General Nuclear, Duke Power, Southern Company, people like that. Yeah. And they can receive some certainty as to the price that they'll receive and the volumes that they'll be able to sell, in certain cases for as long as 20 years. What this means is that the producers are free, in some sense, from the tyranny of the spot market. And lenders are free from that same tyranny. A lender that's lending a couple $1 billion to buy a uranium mine can understand, if the producer has locked in sales contracts, what they'll sell the product for, which makes the loan much more certain. And securities analysts, people like me, have the advantage of that same certainty with regards to the revenue line. I think what you'll see is increased reporting by the companies around the contracts. That reporting is very opaque now. And I think that you'll see a lower cost of debt and a lower cost of equity for those companies that are forthcoming with regards to details around the contract pricing. This will make, I think, the uranium market unlike any other commodity market on the planet. So while the easy money has been made in uranium, I think the sure money will be available to us in the next 5 years, simply because of the price certainty around product.
Okay, interesting points there. Thank you for that, Rick. So you did mention earlier the kind of geographical focus or spread rather of our the projects in our database. But I did want to ask you about the fact that what we have in our top 50 came out so much focused towards what I would typically and perhaps lazily call safe haven jurisdictions. And I'm talking about Canada, I'm talking about the US and Australia. But just wanted to ask you, I mean, do you, what your view is on these safe havens? Do they deserve the name safe havens? And just where globally do you think you see the best risk to reward ratio in mining?
I guess I'm going to come across as an old cynic, but I don't believe there are any safe havens for capital. I believe that, and this will draw us some hate, Caucasian investors, people like you and I, prefer their political risk to occur in English, according to the rule of law. We are less comfortable with political risk that we don't understand, and we react much more to the evening news, I think, than we do to the legislative framework around the world. I do think that countries that are perceived as being less risky, countries that are perceived to operate with the rule of law and respect for private property rights, and countries that have a lot of precedent in their legal systems around their mining codes attract a lot more exploration capital and a lot more development capital. So it makes some sense that even ex-prospectivity, and Australia, the United States, and Canada are still prospective. It makes absolute sense that through the entire value creation chain, all the way down to grassroots exploration, through production finance, that more money is attracted to those jurisdictions when the money is familiar with it, which is to say, when the money has originated in Western countries, and when those countries demonstrate at least some respect for private property rights and the rule of law. I think that this points out a few things. One, it points out an inherent bias, which may or may not be correct among the investment community. And it points out that there is still a bias in favor of capital relative to things like prospectivity. The Archean terrains in Australia and Canada have been much more broadly explored than Archean terrains in other parts of the world, which would suggest that the remaining prospectivity is greater in those places. Similarly, as an example, in the copper business, the prospectivity of the Tethyan metallogenic belt, which I consider to be the best underexplored belt in the world, while the prospectivity is excellent, the emerging nations, the emerging societies there, Uzbekistan, Kyrgyzstan, Kazakhstan, Pakistan, the difficulty there would seem to be the rule of law, respect for private property rights, and of course, the absence of precedent in terms of the development of their legal system around mineral rights and private property. And I think that's a very interesting outcome in your database.
Yeah, definitely. Okay, that's brilliant, Rick. I think we have time for one final question. I just wanted to ask you, really, our focus in this report has been on this, as I call, study stage projects. We haven't looked earlier than that very much. We obviously don't look at producing assets. I just really wanted to ask you, how big an opportunity do you see in this stage of, maybe you call them advanced exploration projects? And how do you kind of look to balance investments between this stage and the earlier stages and the later stages?
This is hugely important, what you've done. Independent analyst, a friend of mine, Lobo Tigre, has done a fairly exhaustive amount of work showing that with a decent-sized Tier 2 deposit defined as $2.5 billion in situ recoverable reserves and above, that the median return that has been enjoyed from the period of time of announcing a production decision, fully financed and fully permitted, and the time that economic completion has been achieved, generally results in 100 to 120% share price escalation, averaged out over 30 years. Understanding then which projects that you would like to own with all of the relevant factors, having the ability to look at the work that has resulted from the study of 460 projects and not having to do that yourself is absolutely invaluable. Of course, the investor is going to have to take this database and do more work. You're going to have to make sure, as an individual investor, that the inputs associated with all these studies were the same. Did they use the same commodity price? Did they use relevant costs that are relevant, to the district? You will also need to reintroduce financial metrics like enterprise value to net present value. And of course, you'll have to screen by relevant management experience. Are the managers experienced at the task at hand? If the development project is in Peru, do they speak Spanish? Have they built copper gold porphyries in Peru? All of those things. But what's most important is that the bulk of the qualitative work that needs to be done has been done by you.
All right. Okay, that's great. Thanks for the feedback on that, Rick. I'd just like to thank you for all of your really useful insights today, Rick. It's been great talking to you. That is about all the time we have today. But if you want to carry on the conversation on this theme of finding the world's best mining projects, it would be great to see viewers at these forthcoming events, Mining Journal Select in London, where you'll be able to collar me and give me your feedback on our methodology, whether you think it's a work of art or you think we've got it all wrong, and of course for Rick's presentations. And you'll be able to join Rick as well at the Rule Symposium in Boca Raton a little later in the month. So just as a final reminder, our Project Pipeline Handbook report is available for sale on the website. The links are on the screen, and the handbook, along with our sister titles, including World Risk Report, Global Leadership Report, and Investor Sentiment Report, can be accessed for free and by our premium subscribers, and details for subscriptions inquiries are on the screen as well. So, Rick, I'd like to thank you again for your insightful comments. It's given us all a lot to think about, and I'd also like to thank everyone for attending today. I hope this has given you all some ideas about how to go about finding the world's best mining projects, and I look forward to seeing some of you in July. So that's the end of the webinar. Thank you again, Rick, and have a good rest of your day, everyone.
Thank you.